Folks, welcome to Best Stock Charts for the coming week. This is Bob Desmond, and it is December the 15th, 2018. So not only do we have a month that is drawing to a close, we have a quarter, we have a year drawing to a close very quickly. With half the month now already gone, we only have a few days left to effect what I perceive to be a breakdown on the S&P 500. What you're looking at here is a quarterly chart of the S&P 500, and we're going to talk about this for a moment. Then we're going to talk about some commentary I provided members last week on the week ahead commentary, members that'll be coming out tomorrow being Sunday, and how I believe that the market would head lower, and we'll talk about the outcome of a few of the observations that I made during that commentary. Now, I would encourage you folks to watch this video all the way through, subscribe to my channel, click that bell button, because if you watch it all the way through, I'll be making an offer to those viewers who have committed to watching the entire video, because you've committed a lot of time to me, and I want to give some back to you. And I'm not referring to the gold membership giveaway that will be announced on January the 5th. Then after I get done talking about last week's commentary, the week ahead commentary with members, we'll segue into best stock charts for the coming week. So let's get to it. S&P 500 quarterly chart. Where are we on a historical basis? Well, you can see that we have been in a massive bull run, and that includes two bubbles, right? Here's the dot-com bubble. Here are the quarters subsequent to the top from the financial crisis. And here we are at current. 4 quarters for 2018. There's only 15 days left to go, thereabouts, in the trading year. And at current, folks, the observation that I have of the S&P 500 is not a positive one. We are at current trading down below the lower band of the rising uptrend channel. Now, some may think of this as being bleak. Some may consider closing their brokerage accounts. I see it as an opportunity, because if we break down to a new quarterly low on the S&P 500 in 2019, there's going to be a vast amount of money to be made to the short side. Not only that, you will see a slew of extreme oversold trades that we could trade to the long side. And we haven't taken a loss on an extreme oversold trade in at least 2 quarters, whereas our continuation breakout trades have not been as consistent as they were when this market was in a strong bull run. And that should be no shock to anyone. Now, while I'm reviewing this chart on the 15th of December, we still have several trading days left to go. It's going to be difficult to affect enough change on this chart to have it close back above this lower band, but it could happen. We can't rule it out. Now, as we proceed into 2019, if we break down below the lows of 2018, which was at 2532.69, we're going a lot lower. We'll probably head down to the next key support level down at the 2134.72 level. That's a big drop. I don't even want to talk about if that support level fails. Now, Ultimate Oscillator putting in lower highs. RSI coming off extreme overbought levels. Stochastics, no lower lows yet. Okay, we're still holding prior lows last seen back in January of 16. However, we are putting in a lower high. Not good. But this is not a broken Stoch yet. MACD histogram losing momentum. So the quarterly chart at current is not looking bullish for the S&P 500. But despite the fact that we are trading down below this lower band of support, I'm still very reluctant to get net short of this market yet. The operative word being yet. Now let's segue into the commentary I provided members on the week ahead commentary. Members anew, the week ahead commentary will be coming out tomorrow. But this is what I had to say, preparing them for the new trading week. The Dow Transports. Here's where things get really, really ugly, folks. We had a massive, one of the biggest I've ever seen, a massive outside reversal week. And we broke down not below 1 support level in dotted blue, not 2 support levels, but 3 support levels, taking us back down below the 10,000 mark on the Dow Transports. This is a sick sector. And it's not isolated to this one sector. It's across the board. Volume, very, very high. I mean, this is really, really bad stuff, what's going on here right now on the Dow transports. And you could take that over and into the Dow Jones Industrial Average, weekly chart. You can see that we rallied last week. We failed to break out above this upper band of resistance. Think about this, the power of the blue dotted line, right? It's like, if only we could just draw a line, and that's where we know the stock is going to, or an index is going to top out, so we could short it. But anyway, bearish key reversal bar, an outside week. Not as ugly as the transports, but pretty darn close. So I think that in all probability, absent some intervention by the plunge protection team, I think that this market is going lower, folks. And with that comes a lot of great opportunities. So get ready. The key is keeping your gunpowder dry, meaning keep some cash on the sidelines so you can put it to work when things get really, really ugly. The NASDAQ composite, it had actually broken out the prior week. We continued higher last week, only to reverse. So we had another outside reversal week, down nearly 5% on the week. And it looks as though we're probably going to head lower here. A lot of technical damage has been done. We have basically a head and shoulders setup. Left shoulder, head, right shoulder, and let's say we're right at the neckline. And if we take out last week's lows, in all probability, this market is going to sell off and sell off hard. So tomorrow morning, if we wake up and we see the futures bright green, we know it's a sucker's play, right? It'll probably fade. So don't get lured in to the pre-market shenanigans being played by the banks. Allow the markets to settle down, because if you do, you'll be rewarded, because in all probability, if we get a spike up in the pre-market futures, they will fade intraday and the markets will turn red fairly quickly. So we'll begin with my comments with regard to the NASDAQ composite. I warned that they may spike this market. They'll try to get a rally going, but the Stokes on the NASDAQ comp were trading down below the 50 level, and rallies tend to fade. What happened last week, highlighted here in yellow, is last week's trade. Here is Monday. They spiked it. It closed off the highs of the day, but it's still a very bullish day. We had a reversal day. That allowed for a follow-through up day on Tuesday. It failed to hold gains. But again, they squeezed the shorts yet again on Wednesday. What happened? They sold off the highs of the day. And I kept telling members all last week, allow for the final hour of trade to pass before you make a decision on whether to get long of this market, because they're selling the market off into strength that is very bearish. And sure enough, Thursday, yet again, they tried to rally the market and it failed. Then Friday, capitulation, they sold it off. We did not close at the lows of the week, but very close to it. This is why, please do not go buying this market right now when you see bright green futures. When I see them, I get very nervous because I know what's about to happen. They're going to sell the market off into strength. It's rare that you ever see a market bottom when you have bright green futures. What you want ideally is for the markets to open up ugly as heck. You want to see the futures down triple digits on the Dow Jones, double digits on the S&P 500. That sets you up for a reversal day. As it stands right now, I am not optimistic. Members will talk more about the markets and where they were last week and how I think we're going to trade this coming week on the week ahead commentary coming out tomorrow. Hey folks, thanks so much for watching, and we're going to begin again in just a moment. But first, I wanted to make a really big announcement. I'm really excited about it, and I think you're going to like it too. And the announcement is this: I am going to be raffling off a 1-year gold level membership to the Contrarian Trader. That's right, trade alerts, daily commentary, paper trading simulator, access to the members forum. And I will be announcing the winner on January the 5th, 2019. All you need to do is pause this video, click the subscribe button, click the like button, and you're in. That's it. So don't wait, enter now. I'll say thank you in advance, and let's get back to the rest of the commentary. I am not optimistic. Members, we'll talk more about the markets and where they were last week and how I think we're going to trade this coming week on the week ahead commentary coming out tomorrow. Now, I also commented with regard to Goldman Sachs, the weekly setup on Goldman Sachs, and this is one of our watch stocks, so we'll talk a bit in detail about it. Take a look at Goldman Sachs. You want to talk about a textbook head and shoulders setup here. I talked about this months ago. Left shoulder, head, right shoulder, neckline. It broke back here the week of November the 12th. And this is what happens. You get institutional selling, program selling when you break these support levels. So this is why it's critical to really use multi-period charts. I talk about this with members constantly. You'll see videos on YouTube by my so-called competitors. They will walk you through what a stock looks like on a 5-minute chart, a 15-minute chart. And sometimes I watch and I say, my God, somebody's going to get crushed one day because they're not talking about what the stock looks like from a higher level view. Meaning, it's fine to look at a 15-minute chart, but first you need to understand what it's doing on a daily chart. And if you're going to use your daily chart as your preferred chart to use when you want to get long of a stock, well, then you need to understand where the stock is trading on a weekly and monthly basis. This linear thinking that is out there must stop if you want to keep your portfolio from blowing up in this kind of market environment. I have been doing this for a long time. I have been through many corrections and 2 massive bubbles, and I profited through them both. But the only way you could do it is by paying attention to the weekly and monthly charts and the signals that the market is sending you. And in this case here, this failed breakout back here where we broke out on Goldman. It broke down to within this trading range back in March of 2018. This is the market. It told you back then there's something very wrong with the banks. It took several months for them to break, but when you see failed breakouts during a bull market, that's a sign of a top. Fast forward, a couple of counter trend rallies, then we've broken. Guess what? We're going lower. As you just heard, we had a head and shoulders setup. I mentioned last week that I thought that we were going lower. We did go lower, down another nearly 4% on the week, and we closed down below a key support level. So absent a gap up next week, in all probability, we are going lower on Goldman Sachs. And this is why it's so critical to use your weekly charts to determine how we're closing out the week and why we may be setting up for a continuation move lower next week. And before we leave this chart, I will give you a clue as to what I'm seeing on the major averages, which I'll be discussing tomorrow on the week ahead commentary, of what formation is setting up and setting up big across the board. And that is this, a setup very similar to what you're seeing on Goldman Sachs, a head and shoulders setup. And on a couple of the averages last week, we in fact broke the neckline. Members, we'll talk more about it tomorrow. Now, daily chart, Goldman Sachs. Okay, so volume has been very, very high on Goldman Sachs to the downside. So we have clear distribution. They were trying to defend the 175 level. You saw on a weekly chart that that was critical support on Friday. Bearish key reversal bar. We broke support. There's a strong possibility that we are going lower. Now, what is a bit optimistic for me to observe on this chart is that ultimate oscillator is beginning to hook up. The Stokes are rolling over down below the 20 level, which sets you up for a ruthless sell-off, but the counter trend rally that normally ensues after this resolves itself is pretty massive. So we are watching the weekly support levels for Goldman Sachs to hit, and we will look to get long of Goldman. But if they spike it up higher on Monday, I'm not going to chase this stock. Members, what we're going to do on the week ahead commentary this week is we're going to go over the intraday charts of Goldman Sachs to see how it's setting up. We'll focus on the 2-hour chart and perhaps the 4-hour chart. Moving on to our extreme oversold trades. Folks, these trades are what I like to call unsustainable extreme oversold trades, meaning this downtrend here on LEE, which is our first one that we're going to go over, is unsustainable unless, of course, you have ongoing concern issues. Now, on all of these stocks, I've looked at the cursory headline view. I have not done due diligence on them yet. I would do due diligence on them prior to entering the trade. So we'll assume that we have no ongoing concern issues with any of these names. So that being said, we have RSI on Lee at 16.29. We are rolling over on Stokes, but believe it or not, we broke out. But that breakout failed. We put in lower highs, and we're probably going to pull back yet again, especially after the performance on Friday where we flashed a bearish key reversal bar. And we closed right at support at 1.95. Actually, we closed 1 penny below it, but we'll say we closed at it. Be conservative. Volume really picked up on Friday. So I think that in all probability, we are going lower here. Now, members, tomorrow we're going to be talking about where we have historical support on Lee Enterprises, because it's at that point where we would consider entering the trade. Why do we want to wait until we get to a historical support level? It's because we know that we have other technicians of like mind who are watching the shares. They are looking at historical support, hoping, as we are, that they have like-minded traders willing to defend that support level. That's why we do it. It makes sense. So Lee Enterprises is looking good. This is a stock, though, that's trading below $5. We can easily see RSI below 10. So don't get all excited because we have RSI 16. It can go a lot lower. Members, more tomorrow on the week ahead commentary. Build-A-Bear Workshop. I mentioned this stock last week. I mentioned it's probably going lower, and it did go lower despite the fact we had RSI well below 20. We closed out the week at 13.11 on RSI. Guess what? It could go lower. It's below $5. I wouldn't be the least bit surprised to see RSI below 10. Now, I did discuss where we expect to see a defense on a historical basis using, I believe it's a monthly chart on Build-A-Bear. And this is one of our favorite stocks because it's the holiday season. So let's support Build-A-Bear. I am not an affiliate or a promoter of Build-A-Bear. This is just the holiday spirit. So members, we'll be talking about, the monthly chart tomorrow on the week ahead commentary. The next chart up, Eagle Point Credit. Now, Eagle Point is trading with an RSI of 16.76, which makes it very attractive, especially since we had what appears to be a potential bottom here vis-a-vis this bullish key reversal on Friday. Really bullish stuff. And volume rolled in very high. And what we'll discuss with members tomorrow on the week ahead commentary are the historical charts, meaning multi-period charts, weekly, monthly charts. Where do we have like-minded people willing to support the shares? Was it at the lows of Friday at 14.05? Maybe. More research needs to be done, but this chart is setting up very, very nicely. ECC looking very good as a potential long trade heading into the next trading week. The next chart up, Francesca's Holdings. Now, I will caution that brick and mortar plays are a major concern for me, but I can't ignore this chart. We have RSI on a daily basis at 9.83. So this is a perfect example of how you can have RSI sub 10, and it looks as though it's going lower. On Friday, we had another long red candlestick on big volume. This is not mom and pop selling 100 shares. ADX signal line is nearing 70. That's very, very quote-unquote overbought and unsustainable. So I think that we are going to get a short covering rally fairly soon on Francesca Holdings, but the market has not sent us a signal yet that we have seen a bottom. And I'll share with you the historical chart here. This is a monthly chart. We have no historical support below. So what do we do in a situation like this? Well, we rely more heavily on the daily chart for a reversal day like we saw similar to ECC. This is a bullish key reversal. We're looking for that here. But what we'll get first on an intraday basis using the 2-hour and 4-hour charts is a signal that we're beginning to see some stealth accumulation on Francesca's Holdings. So we'll be looking at those charts tomorrow with members on the week ahead commentary. So members, stay tuned. Tuesday morning store, I spoke about this one last week. This is another one where I said it was oversold, but it could go lower. It could go below 10 on RSI. We're at 11.99 now. We were down nearly 9% on the week yet again. But folks, this is unsustainable. Are we at a historical support level yet? We're not sure. We need to go to our weekly and monthly charts to discuss it. We need to review our weekly and monthly charts. But using the daily chart alone, I'm not excited yet. I need to see lower lows here because they attempted to rally it on Friday. We were stopped dead at $2.20 because there's resistance there. That's the market sending a signal. And we spoke about this one last week, and I mentioned you got to be careful here. The markets are sending you a signal vis-a-vis these topping tails on these candlesticks. Call them wicks, call them shadows, call them cupcakes. It doesn't matter. What it signals by the market is that you have sellers selling strength, and the probability of a weak stock getting weaker is very strong. And sure enough, down another roughly 9% on the week last week alone. And we're probably going lower this coming week. So members, it looks as though we will be reviewing the weekly chart this coming week. Now, folks, before I go into my final clip here, I made a promise to provide value to our dedicated subscribers. So the first 5 viewers to leave a single symbol in the comment section below and click the like button, I'll go over your symbol on swing trading today, either on Monday or Tuesday of this coming week. So again, click the like button for this video, enter a single symbol in the comments area below, and I will review those symbols on swing trading today, coming out either Monday or Tuesday of this coming week. So let's leave things off with NVAX. We spoke about this one, I believe, last week, and we were looking for a breakout. We got the breakout. We saw a continuation move higher last week. Now, we rallied up into resistance, and then we sold off a bit. So I'm looking for a pullback here on NVAX, and we'll look to enter the trade, and we'll look to add more on a rally up and through 2.75. That's the real honeypot that we're looking to break through. Because if we get a breakthrough above that resistance level, you're going to see some technical buying of NVAX. We had a breakout and a continuation move higher on RSI. Volume was very good last week. So members, we'll talk about the daily chart tomorrow on the week ahead commentary. Folks, if you're not currently a member, please join now. Lock in your membership for 2018 because in 2019, the new website will be launched. Prices are going up on new members in 2019. For existing members, the prices never change. So act now. I want everybody to have a really great weekend. You earned it. And have a profitable trading week. And I'll talk to you soon. Be well. Hey, folks, just a really quick thank you for watching this far into the video. I appreciate it so much. And a quick reminder, don't forget about our one-year gold membership raffle. That's a $1,164 value. And all you need to do is just click the subscribe button, click the like button, and you're entered. That's it. And we'll announce the winner on January the 5th, 2019. I'll see you there. Let's get back to my commentary. And if you have any questions, leave a comment below.